Well, tech equipment, computing systems, and LED maker SGH beat analyst profit estimates for its fiscal second quarter. The company also serving up a better than expected outlook. We're seeing the shares slightly higher right now. We want to talk more about the numbers with SGH CEO Mark Adams. He's joining us now. Hey, Mark, good to see you.
Hey, good morning.
I'm looking at the breakdown of your different sectors here. It looks like you saw strength in the LED solutions. It looks like you saw strength in memory solutions, less so in intelligent platform. And I'm curious what you're seeing in terms of the demand dynamics across each of your segments.
Well, thanks, Julie. Good to see you again. The challenge we had that you're identifying around IPS in the quarter was really supply driven. Our demand profile in that business is pretty good. Large system deployments tend to get a little choppy in terms of the timing. Sometimes it doesn't always align up with the quarter, and some of the supply constraints that we faced held us back from really having a great quarter in IPS relative to the other two businesses. But overall, the demand for the business was pretty strong and remains strong as we navigate these uncertain times in the microelectronic supply chain shortages.
Mark, where are you seeing some of the most acute shortages in your business?
Well, primarily across some of the bigger sectors around GPUs and CPUs, some storage and memory products in general. And I think we talked last time that the unusual nature of the supply chain shortages we're all facing is the breadth of it across so many different categories that have to line up. I think that obviously the markets are trying to correct themselves, but you just can't change capacity at the factory level quick enough.
Have you had to push up prices as a result of these supply chain constraints?
Well, in a lot of cases, sure, we have to pass on those pricing, and that's what allows us to achieve the margin levels and keep them stable. We've had to be able to manage that through our customer engagements.
And Mark, you talked a little bit about on the call that you do expect some improvement in the supply chain issues, I believe, going into later this year. What signals are you watching, or what sort of levers are you or your suppliers pulling to try to make that happen?
Well, I think in general, the index we get is the quotation on delivery times, and we're starting to see some commitments that fall in line with how we're forecasting the business going forward. And this is not a new phenomenon. The supply chain shortage has been going on for the better part of a year or so, maybe longer in some cases. And, as I said, the cycle of improving supply is a long one because capital has to be deployed, new technology, new systems have to be put in factories to actually then get qualified. And so I believe that's all in process. It just doesn't happen overnight. And I think we'll start to see some improvements towards the end of 22 into early 23.
I would argue, Mark, your business is a great forward-looking indicator into demand for many sectors. Is there anything that you're seeing right now in your numbers that suggests a recession is likely in the next 18 months?
Well, it's hard. I wouldn't be able to go out 18 months, but I would just say that in general, Brian, it's a great question. I think that, our demand signals are very strong. And the thing we watch about when supply is constrained is the concept of double ordering. And we're able to monitor that pretty well and in some cases get non-cancelable orders. I think customers realizing the sophistication of this challenge on the supply chain are really a lot more consistent in their ordering patterns. And right now, demand looks pretty good. I just hesitate on 18 months because you hear about inflationary concerns. We've got the macroeconomic headwinds that we're facing with Eastern Europe. And so, but as we forecasted yesterday on the call, our short-term view is really positive on demand, and we're really bullish on the business.